This $1.7 trillion giant, one of the leaders in the finance industry, just warned that the consumer is not doing as well as everything seems. And in today's video, I'm going to dive in to a few metrics that show not only is the consumer extremely weak, but we might be in some serious trouble, even as close as 2008. So first, let's dive into what we saw from the jobs numbers here not too long ago, when they just broke the news that the jobs dropped by 176,000 to 7.2 million. The second lowest since December 2020. That brings the 3-month average to 7.4 million, the second lowest reading in a quarter since 2021. So the job vacancies and unemployment fell below 1 for the first time since early 2021. Meanwhile, government jobs are falling very low. So the labor market is deteriorating. The big thing is, though, is that Goldman Sachs saw this all coming. So everybody is always cautious when they see these numbers, the revisions, and everything else. But the reality is that the guys that follow the market, and they do it extremely close, I'm detailing all of them. So make sure you guys are hitting that subscribe button as I am going through and following all these guys very closely on this channel. But Goldman Sachs, well, they had that downward revision of 950,000 jobs. 950,000 jobs in a revision. That's nearly a million, folks. That doesn't seem to be a healthy economy when you break it all down. Are we really going to say, hey, everything is fine, peaches and daisies, when we're seeing that their economics team is showing, hey, you know what? Weakness is coming. This is not me saying this, folks. This is not a doom and gloom. This is Goldman Sachs, a $1.7 trillion bank. So where does Goldman Sachs, rank among banks? It's the 5th largest bank in the world. Or I guess 5th largest in the United States. Excuse me. Sorry, I was doing a quick little Google search here because I thought that was an interesting little tidbit to add. We've got the 5th largest bank in the United States. Obviously, one of the biggest here, right? And then on top of it, we've got the under the radar that everybody was talking about. I went over this literally yesterday because I was like, oh, you know what? This job report, it looks weak. It looks weak, but it's way worse than I even saw it coming. The labor market is in serious trouble here, folks. Jobs surged by 88,000 in August 25 alone. Yet that makes the year total to nearly a million jobs, up literally 66% in 1 year. So what is going on here? Job cuts surge, the highest since the 2020 pandemic. That's something that we don't normally see in a healthy market. We don't normally see things where you see headlines saying, hey, worse since 2008, worse since a recession, worse since this, worse since the literally a pandemic that shut down the entire global economy. When you see phrases like this, you have to watch out. So you got to be cautious with all of this. But either way, the labor market declining and enforced by participation, falling 62.2% in its latest report. It's a trend that is not looking good. Everybody's saying, oh, it's the aging population. There are some potential issues here, But in reality, I don't think it's the aging population or anything. I think it's just a peak of what's to come. Now, we have the potential of what is coming here in the next 3 weeks with the rate cut. And I mean, I feel kind of disingenuous even saying potential at this point, as we have a 97.6% chance of cutting interest rates. Literally 98% basically at this point. But a million jobs vanishing from the books is going to cause the Fed to cut interest rates. Let's just be plain and simple here. We have inflation running rampant. The consumer is hurting. So they need to open up more funds for the consumer or for the businesses to in turn hire these consumers. At least that's the thought. That's the lever that the Fed can pull at this point is, hey, you know what? Cut interest rates. That's all they can do, you know? So they're going to continue to pull that lever as long as they think that it's going to work, right? That manipulation there. But there's something interesting when you take a deep dive into all of this. And this is a great thread by friend of the program, Billy Boone. Credit card defaults just hit 2008 levels. Now, like I said, when you see things like this, headlines like this, 2008 levels, that's not necessarily what you want to hear. But the unemployment, while stocks are at all-time high, is low. Here's what the data shows, right? We're nearly past 2008 levels in some areas. Americans now owe $18.39 trillion in total debt. That's $4.24 trillion more than 2019. Credit card delinquency rate, we're less than 1% away from 2008. We've got student loan delinquencies skyrocketing in flight, which is not usually what we want to see. And the banks, they're doing the opposite. Credit limits keep increasing. They keep giving mo money. And as the notorious BIG says, mo money, mo problems. So with all of this, right, we have student loan delinquencies increasing, credit card balances increasing. We have debts at all-time highs and Americans currently thriving in debt. And then we have jobs disappearing from the market. It seems to me like there is something bubbling underneath the surface here, folks, as we've got just a lot of weakness showing here, right? Like there's a lot of cracks coming. So you have to keep a close eye on what else is going on. I'm going to keep going through this, but make sure you guys are hitting that subscribe button for me because we're looking at not only some geographic areas, you know, the big states, Nevada, California, and Florida. These guys are seeing this and spreading it. And this is a clip from The Big Short. I mean, you guys know that I've been showing you the weakness in the overall housing market here. But what else are we seeing? We're seeing crazy things like foreclosures. We're seeing housing get done, and the Fed needs to cut interest rates because consumer debt is deleveraging away, right? Consumer spending 70% of GDP, so it's always down, right? So earnings fall. And what is a big consumer staple, at least these days? Lululemon. I mean, look at this chart. It crashes 13% in a single day, like in just hours, strictly because earnings were so poor. I mean, consumer spending is down so bad that it's just insane. And then on top of it, we have to keep buying back treasuries. And these buybacks are accelerating, right? So we have the consumer absolutely hurting. Nobody's buying the U.S. debt. And we have bond markets failing across the globe. Now, I'm not trying to paint this picture to you guys to say, hey, you know what? Everything is going to be perfectly fine. Obviously, we've got some layover effects from what we had just a few years ago, right? You can't shut down the global economy and expect everything to be perfectly fine, right? You just can't do that. So, we're seeing the buybacks happen. We're seeing consumer staples and things like yoga pants. I mean, hey, hell, walk down the street. Come down to Tampa, Florida, where I'm at, folks, and tell me you don't see yoga pants on like 90% of the chicks out here. If they're not buying any of these Lululemon, they've lost it, right? So we're seeing treasury buybacks increase, and these buyback programs aim to boost liquidity. Now, what is boosting the liquidity going to do? It's just going to send asset prices higher and higher and higher. And so the liquidity aspect of it isn't an issue. You know why? Well, we're hitting all-time highs in the S&P 500. So the S&P 500 hitting all-time highs isn't a liquidity issue, right? There's issues underneath the hood that are more drastic than, hey, we need to put more liquidity into the market, right? So the world's largest bond market can no longer function without intervention. Now, this is where things are going to get kind of hairy and a little interesting here because of, all of these various factors. Like the demand for the Fed's repo market is the lowest since 21. And what did we have in 2021? Obviously, we had, the cerveza sickness. So the whole global economy shut down. And then we've had one of the worst starts in history to the US dollar. Okay, the Dixie is up by 0.15% today, but I wouldn't call that exactly where we want it to be at 98.3. The Dixie, we're keeping a close eye on how the strength of the dollar is doing, but we want to really keep a close eye on, how the consumers is advancing in this. So the excess liquidity is declining. That's why the Fed's utilizing the repo. And, we're seeing the consumer spending go down and down and down. And they're going to blame this weak job market to cut Fed rates. But core inflation has risen above 3% and is 110 basis points above that 2% target. Now, they're saying it's exciting time to be an investor. I'm saying you should be worried about what is to come here because, hell, I think we are in an asset bubble. And for those of you guys who keep coming back to this channel, I appreciate you guys coming in the chat, listening at work, smoking the like Cheech and Chong. Make sure you're hitting that subscribe button. But I'm detailing all of these here on this channel about how, hey, the market cannot move without tech. We've got such a top-heavy stock market. It is absolutely insane. I mean, the top 10 stocks account for 59% of the U.S. stock market rally in the past 6 years. That's 10 companies carrying 60% of the load. 10 of them. They've accounted for $16 trillion. Now, do you guys think this is sustainable? I mean, we get worried about monopolies. You want to buy the S&P 500, they're saying, because, hey, it's the 500 best companies, right? And then the U.S. standard of living. You guys know I keep loving to show this one because the U.S. standard of living, only 25% of Americans say there's a good chance they can improve that. 75% say they do not believe the next generation will have a better life than their own. I mean, if you just look at the facts here, everybody's showing you, hey, this is going to be an issue. So we need to keep a very close eye on the consumer. I'm going to be detailing it. So make sure you guys are hitting that subscribe button with the bell notification so you could join All Nighter Hider in the chat. I saw we got a max of 6 yet in here, maybe 7 at one time. I love seeing that. Hope to see all of you guys here tomorrow as I am detailing all of this for you guys every single day this month of September. So make sure you help me out by hitting that subscribe button, and I'll catch you guys all